Hey everyone, this is Andrew Faldy with SMBU, and what you see on the screen here is an equity curve of an options strategy backtest that goes back to the very beginning of 2008 all the way through 2015. And I wanted to share this because I found it very interesting that this equity curve came out as nicely as it did, because I actually expected this test to do worse. Because with this one, I was testing a simple configuration of a monthly spread, and I wanted to see how good was the configuration by itself. If I remove all of the adjustment parameters, I remove all of the analysis of the detailed values of the Greeks and the ratios, if I stripped all of that away and I just want to know the answer to this question, how good is the profile at entry by itself? All else being removed from trading, all other types of adjustments, all other types of filters, being removed, very simple set of rules on an entry. How good was that at creating the performance of some type of edge in the trading? And the picture you see is the representation of the answer to that question, which is pretty good. And this trade here is a very simple broken wing butterfly, medium probability, so at the money, very close, putting the spread right on top of the market. Broken wing butterflies are just a configuration to keep the T+0 line relatively flat at entry. But after that, just letting the trade go for 30 days, closing it and reopening it in the next month. And with this one, part of what causes that and allows there to be a fewer number of large drawdowns, there are a few during very volatile markets, but there's a fewer number of big drawdowns because we're starting out nearly 90 days to expiration, holding for a month, and then rolling out to the next expiration. Very simple trade. So this is kind of meant as a just sharing some information with you that I found interesting. The results coming back better than I expected, which can be an encouraging thing, that maybe a lot of complexity in options trading, daily management, daily adjustments to options trading isn't necessarily what causes profits. It very well may be that just a good, solid configuration with a good risk reward, well positioned to collect income and require very large movements in the market to get you in trouble. That by itself is really one of the biggest edges to options trading. But it does take a solid configuration. It does take defined risk spreads. It does take a few of these elements of knowing how do you structure, how do the options chain affects your profile, making sure that you have the right amount of risk in each direction, setting up your risk reward. Doing that by itself adds the edge. And then after that, you want to have that baseline. That's what this test was. This is the baseline of, is the configuration good? And then how do I improve the results with very simple surgical adjustment strategies? Not overly complex, very simple strategies to make adjustments to fix the large drawdowns that occur and improve the total returns that come about. And making sure I don't do that in a way that's curve fitting. So the way to do that is very simple filters and reasons to adjust so that I'm not letting the trade go too far against me. Simply cutting off losses at a certain level is one way to do that. Using simple market filters as far as extreme implied volatility or major changes in trends that can be defined by long-term moving averages. Things like that are great ways historically to stay out of super volatile markets that can last for months or move the market 20, 30, 40% or more. So those things can be added as well, but the baseline test here is very interesting and very good. And with a no-touch once per month trade, the results came back much stronger than I expected with something like this. And I'll be working more to improve this and add some more criteria to it. And I look forward to sharing that information with you in the near future. Real quick, I will share a picture of what the trade looks like. I don't want to get into too much detail about the rules of the entry or anything like that, but you can see it's a very simple broken wing butterfly. The tent is positioned over current market price and relatively flat line, plenty of room in either direction before you get into any type of delta risk or any steep risk conditions. So that's that. I wanted to share that with you. Feel free to send me an email, afaldi@smbcap.com, if you have any comments or questions about this, and I will be doing some additional testing and sharing some of the results with you as far as these type of minimal touch, minimal adjustment type of income strategies. That my goal for that is to be able to scale up to very large size and have reliability and dependability that I'm not going to have to make major adjustments in larger and larger positions while still having a good defined risk and a good way of controlling risk when certain conditions come across in the market. So that's all. Look forward to your comments and feedback, and I also look forward to sharing more with you in the near future. Thanks.